You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello and welcome back to Infinite Banking Mastery. This episode, we will be going over some more of the questions that I went over with my business owner group of friends that I started with last week on the topic of long-term disability, such an important coverage. According to the National Safety Council, someone becomes disabled every 1 second, and almost 90% of long-term disability claims are caused by illnesses rather than accidents. 70% of the private workforce has no long-term disability insurance at all, according to seniorliving.org. And 90% of workers underestimate their own chances of becoming disabled, with 85% expressing little to no concern about it at all. These last two statistics came from a company called A Place for Mom, a company I worked closely with while a marketing director in the assisted living industry almost a couple of decades ago now. By the end of this episode, hundreds more Americans will have become disabled, most of whom have no plan. That is scary to me and crazy to think about. Okay, so let's get to our first question. What is the difference between own occupation and any occupation disability definitions, and why does it matter? Here are the options I gave my group of business owners. They're the same thing, just different insurance company terminology. Own occupation pays if you can't do your specific job. Any occupation is always the better policy. Or own occupation only applies to physical disabilities. So the answer to this question is, own occupation pays if you can't do your specific job. Any occupation only pays if you can't do any job at all. This is one of the most important distinctions in all of disability insurance and one of the most misunderstood. Here's an example. Let's say you're a dentist and you develop a tremor in your hands that makes it impossible to practice dentistry. Under an any occupation policy, the insurance company might say, well, you could technically work a desk job or consult or teach, and they would deny your claim. Under an own occupation policy, you are covered because you cannot perform the specific duties of your profession. You would be able to do other work and still receive your disability benefits, so long as you were unable to do your specific job. So in the case of the dentist scenario I mentioned, if you are a dentist and developed a tremor in your hands, or a surgeon and therefore can't do the specific duties of your job, you would be able to do something else, like maybe be a professor at a university or a consultant, and you would still be able to receive your monthly disability benefits so long as the tremor persists. Now, if you discovered the underlying condition and were able to get well again and able to do your job, then you could go back to your job and continue. Your disability benefits would stop and you would start paying your premiums again in case of another disability in the future. Because during the disability, your premiums would be waived. You would not have to pay them while you're disabled. But then if you get better, get well, go back to work, you just start paying them again. This is why this definition in your policy is not just a technicality. It is the difference between receiving benefits and receiving nothing. For business owners and professionals, own occupation coverage is the gold standard, period. Okay, next question. What percentage of your pre-disability income does a typical long-term disability policy replace? 100% of your pre-disability income, 80 to 90%, 60 to 70, or 40 to 50? The answer to this one is 60 to 70%. Most long-term disability policies replace somewhere between 60 and 70% of your pre-disability gross income. Policies are intentionally structured below 100% to give people an incentive to recover and return to work as soon as they can. But one thing that catches people off guard and that you might not be aware of is that if your employer pays your disability premiums for you, or you pay them through a business with pre-tax dollars, the benefits you receive will be taxable as ordinary income, which means that 60 to 70% will shrink even further by the time it reaches your bank account. On the other hand, if you pay your own premiums with after-tax dollars, your benefits generally come to you income tax-free. That's an important thing to figure out and a conversation to have before you need to file a claim, not after. And one additional thing to note is that at some point, your age will prohibit you from acquiring long-term disability coverage. Usually around age 60 and possibly to age 64. I know a lot of people who plan to work to age 70 and a little beyond, but if you don't have coverage in place before age 60, you may not be able to get this type of coverage, or your options just may be limited. The next question I asked my business owner group was, what is an elimination period in a disability policy? Some of the group thought that it's a clause that removes pre-existing conditions from coverage. Some thought it's the period after which your benefits stop. But the answer to this one is that it's the waiting period before benefits begin after you become disabled. Think of the elimination period like a deductible, except instead of a dollar amount, it's measured in time. Common elimination periods are 90 days or 180 days, meaning you have to be disabled for that long before your benefits kick in and start to pay. This is why having adequate cash reserves or savings is so important when you have a disability policy. If your elimination period is 90 days, you need to be able to cover 3 months of expenses entirely on your own before that first benefit check arrives. And for business owners, this can hit even harder because it's not just your personal income on the line, it may be the business cash flow as well. Okay, next up, Social Security disability insurance. Can you count on it as your backup plan? Yes, it's easy to qualify and pays pretty well. Yes, if you've paid into Social Security for at least 5 years, approval is automatic. Only if your disability is expected to last 6 months or more. No, nearly 70% of initial claims are denied. That last one I stated, that's the answer. That 70% of initial claims are denied. Social Security disability insurance denies approximately 2/3 of initial applicants. 2/3. And the appeals process, if you go that route, can take anywhere from 1 to 3 years or longer. And if you do eventually qualify, the average monthly Social Security disability benefit is roughly $1,500 a month. That would be nowhere near enough to maintain your lifestyle, your mortgage, your business obligations, or your retirement savings. Social Security disability is not a plan. It is a last resort with long odds and a very long wait. If that's what you're counting on, I want to respectfully encourage you to reconsider. And the last question I gave my group of friends was, as a business owner, which type of disability policy is most important to understand? Is it group disability through your business, individual own occupation disability insurance, short-term disability only, or workers' compensation? And the answer to this one is individual own occupation disability insurance. Of course, these other types of coverage are also important, but for the business owner's own coverage, the most important to be concerned with, to understand, and to acquire is own occupation coverage. If there's no business owner, oftentimes there's no business. As I mentioned earlier, for business owners and professionals, individual own occupation disability insurance is the gold standard. Group disability through your business can be a nice supplement, but it often has limitations, income gaps, narrower definitions of disability, and it doesn't travel with you if you leave or change your business structure. Not to mention, the business could change the coverage or take it away if the business isn't doing well. An individual own occupation policy is yours. It's portable, it's specific to what you do for a living, and it's built to protect the income that funds everything else in your financial world. And I do want to point out as well that not everyone actually can qualify for own occupation disability. It is based on your occupation, what you're doing, and the more physical labor that you do, the less likely you are to be able to acquire an own occupation definition for your disability. But if it's a choice that's available to you, I would lock it in. All right, you may have done well as I went through those questions, or the answers may have all surprised you. Either way, I hope this was information that you found useful, that you have a slightly clearer picture of what long-term disability insurance is, what it covers, and why having the right kind in the right structure matters. I plan to wrap up the talk on long-term disability for now in next week's episode, but here's the bottom line. Your income is your most valuable financial asset. It funds your basic living expenses and needs, your family, your business, your IVC policy, your investments, your retirement, all of it. And yet most people insure everything else before they think about protecting their income. It's a coverage most people don't think twice about. If you have coverage through work, you should take a look at it and make sure you understand what you have. And if you have questions about your current coverage or you're not sure if you have the right type of policy for your situation, I'd love to talk with you. You can reach me at Valerie at alphaomegawealth.com. If you found this episode valuable, please share it with someone you think could use it. A business partner, a colleague, a family member, a friend. I'll be back soon with more. Take care of yourself and hope you have a wonderful week.
This is the podcastfactory.com.